Hi, this is Brian Resney, President of Resney Wealth Management. I'm going to bring you a nice update about market trend indicators. One of the things that we worked on for a long time is doing a lot of back testing of ways that we can help really protect our clients' portfolio in severe down markets. Now, one of the things that I want to stress is when you are managing money, and often what happens with a lot of investors is huge downdrafts and when the stock market goes down, like we saw back over here in 2002 with the tech boom and bust. And then we had the credit crisis back a couple years ago right here. I'm going to talk about a strategy that we employ within our client portfolios now in order to help protect your portfolio in severe downdrafts. I've often talked on my radio show about buy and hold investing is a lack of investment strategy, which I still believe. Most brokers have you brainwashed that, hey, buy something, hold on to it, in 10 years you're going to be wealthy and wise and all that great stuff. Unfortunately, that's really not the case. How many of you investors over the last 10 years have less money than you did 10 years ago? Because you went through the tech boom and bust, and you went through the credit bust just a few years ago. If you look at the S&P, which is here, is lower than it was 10 years ago. I'm going to talk about a strategy that we've done a lot of back testing on that is now used in every one of our client portfolios in order to reduce risk in severe down markets. You can't reduce all the risk. You can do some of risk reduction through diversification and proper investment strategy and management. But one of the things that we do is we want to reduce severe downdrafts in your portfolio. If I could show you a way that in severe downdrafts of the U.S. stock market, you can step aside mechanically. It tells you to sell in order to reduce risk in your portfolio. How would you like to be down maybe 10 or 12% instead of being down 50%? Let me show you how our market trend indicators work. Essentially, we'll go back here to the tech boom and bust. Around the beginning of 2000, the year 2000, we had a confirmed sell signal right here from our long-term market trend indicators. Anytime that happens, it tells us whatever that sector is that we own, and it hits that confirmed sell signal on a long-term trend, we exit that position. This is a representation of the S&P 500, which is a broad market index. You would have gotten out here, and it would have told you back in kind of the beginning of 2003 to re-enter. If you notice, you're missing the major chunk in the middle of that big decline. So again, you're not getting out at the top, you're getting out close to the top, you're not getting in at the bottom, you're getting in close towards the bottom. What you're essentially doing is you've got a mechanical, non-emotional mechanism to exit out of risk assets when you should. Again, most investors, and I would say more than 9 out of 10 investors, do not have a disciplined investment strategy, nor do they have a disciplined risk reduction strategy in severe down markets. Now, the same strategy would have put you back in the market in 2003 in a confirmed long-term uptrend and would have had another signal back in around 2008, the end of 2008, beginning of 2009. As you notice, that's when we had the credit bust, when the markets were down again more than 50%. It would have put you back in around June, July of 2009. And if you look at the 10-year period here, we would have had 4 different complete in and out of the stock market, only 4 times in 10 years. But essentially, if we take a look at the back-tested results of this risk reduction strategy, just using the S&P 500, folks, look at what happened. If you would have used this strategy to exit, you would have made 57% on your money over that 10-year period of time, or an annual return of 5%. If you would have had a buy and hold approach to your portfolio in the S&P 500, you would have lost actually 6.17% over that time frame. You're talking a difference of around 65% return. So again, buy and hold, you would have had a negative return over that time frame, and you would have had huge peaks and valleys in your portfolio, or using long-term market trend indicators, you would have actually had a profit within that portfolio, looking at the S&P and looking at mechanical discipline ways to reduce risk in your portfolio. Now, is this the complete strategy within a portfolio? No, but it's one strategy that an investor, I think, needs to have within risk reduction in your portfolio. Let's face it, most investors don't like to see their money go down 30, 40, 50%. So are there ways you can help reduce that risk? Yes, I believe there is. But again, you need to use a disciplined risk strategy and you can't be lulled into the old brainwashing of Wall Street, which is buy and hold investing, which in my opinion is a lack of investment strategy. I hope this helps you a little bit in looking at how the market basically trends. The market's either going up or the market's going down. And in essence, when I talk about the investment markets, I'm not only talking about the stock market, I'm talking about the emerging markets, currency, gold. I'm looking at real estate. These same market trend indicators for the direction of the market and also using relative strength, I think, are extremely important today for you, the investor. These are things we employ with all of our client portfolios because we feel by using disciplined risk strategy and using relative strength in a portfolio, we can better your portfolio and help you achieve your retirement goals. If you're not using market trend indicators, if you don't have a disciplined investment strategy, if you'd like to talk more about how this strategy can work in your portfolio to reduce risk, and you're serious about making a change in your portfolio and looking for professional investment management, we are always looking to take on new clients. Call our office if you'd like to sit down for a complimentary consultation. If you're not happy with the results you're getting, and if you're finding that that broker or so-called advisor is nothing more than a salesman, we love to help you get your portfolio back on track. Call our office at any time. You can meet at one of our Florida offices or in one of our Illinois offices. We'd love to work with you in a manner that's prudent for you. And until our Sunday show, make sure you have yourself an extremely profitable week.